In the previous cycles, 17 and 21, we got to 2 times fair value. In 17, the fair value was 10. We got to 20. In 21, fair value was 32. We got to 69. When you're 2 times above fair value, your
Fair value model is clean, but ignores ETF demand. This cycle has structural buyers that didn't exist before.
going to fall at least 50. But the problem is when you're falling, you pick up speed, you crash right through the floor. And, we went down 84% and 75%. This time we only got to 126. At the time, the fair value was closer to 90.
Only 33% above fair value at peak? That's the most bullish stat here, and he's framing it bearish.
33% above fair value. So we don't have to fall as far. And so we probably aren't going to have as much momentum. How much further do we need to fall? We're 40% off the peak. I've seen numbers that I think are interesting. Peter Brandt says 63 is the number that his chart goes out to. I've seen another at 58 tracks.
Brandt's 63K target assumes old cycle structure. On-chain accumulation says strong support at 72K.
Pretty well in terms of if you count the months between the peak and the trough. My guess is we kind of meander in this zone. The bots are going to sell. Institutions are going to sell futures, and they're going to keep a lid on prices for some period of time. And what you need is that upward thrust to break through and cause a short squeeze.